Welcome back to Power Lunch. I'm Mike Santoli. It is time for Trading Nation. GM racing higher today as investors applaud restructuring plans that include a 15% cut to its workforce. Those layoffs prompting a meeting between GM CEO Mary Barra and White House economic advisor Larry Kudlow tomorrow. The automaker now up more than 20% from its 2018 lows hit just last month. Gina Sanchez is with Chantico Global to talk about what this all might mean for investors here. Gina, on the one hand, understandable, getting more productive, essentially trying to save money down the road, a net positive for investors. On the other hand, it's kind of an acknowledgement that the business model has been, kind of broken for a time now. So where does that leave you in terms of the stock?
Well, you're right. The business model has been broken. And I do think this is a very bold move for GM because basically they're looking at the writing on the wall and saying, car ownership is down. All measures of kind of car ownership are down. Even parking lots are going out of business in major cities. And so kind of their decision to take this and reinvent themselves in two ways. One is through electric cars and the other is through autonomous vehicles. I think they're just sort of looking forward and saying, if we're going to make a shift, we're going to have to make a big one. And in order to do that, we need to figure out how to raise that cash. And so, I think that this could be a very interesting move for GM.
I should correct myself, actually. Larry Kudlow meeting with Mary Barra today. So I guess that also brings up the question, though, of whether this layoff plan is going to be so unpopular politically and cause enough public relations noise that, in fact, it jeopardizes what GM's trying to do here.
Well, I think you're right. I think that is a challenge. Obviously, when you lay people off, it's a very unpopular decision. And, especially, right now, we're looking at an economy that is probably peaking. And if anything, the administration is trying to figure out ways to sort of continue the party. And this is not going to help. If anything, it's going to really hit them in states where they really need the votes.
Ari, we're joined here by Ari Wald of Oppenheimer as well to take a look at the GM chart. A lot of fundamental investors said this is a dirt cheap stock for a long time. What does the price action tell you, if anything, today, Ari?
Yeah, looking at the longer term trends, I would say it's generally directionless, so really tough to make the case for it's either being a top buy or a top sell. But here are the trading levels you have to watch here, Mike. First off, $39. We came right into this today. Why this is important, this was the gap in the stock dating back to over the summer in July. Typically, you'll fill the gap. They'll act as resistance on the way back up. And the stock has done a pretty good job of respecting these gaps. More recently, the October gap at 34, it held it as support on the November bounce back. So $39, important level to watch right here, right now.
All right, we will continue to watch it. Thanks very much, Ari and Gene. Appreciate it.
A double bottom is a chart pattern that suggests the downtrend may be ending and ready to reverse. Sometimes called a W formation because it looks like a W. A double bottom occurs when prices form two distinct lows on a chart at around the same level. Traders often view a break of the highest high in the formation as a bullish signal.